Josh Brown, how do you see things relative to what you've heard on the program already?
Well, I think there's a lot of talk about inflation as though it's a negative thing, but the Fed has spent the last 10 years telling us they were literally trying to bring inflation about. So now we have it. We don't like the reason for it. It involves supply shocks and things that really were a long time coming beneath the surface even before the pandemic. So I'm not really listening to most of the commentary, the hysterical commentary. I think the smartest person on what's going on right now is Jeff Curry. I listened to him talk about this idea that COVID was really an accelerator. The reality is capital returns in anything commodity related, whether it's oil, gas, fracking, mining, were horrific. For like 15 years, since 2007, 2008, capital returns in that sector led to lower investment. We're just not investing there anymore because nobody's making money there. Now, all of a sudden, you see stock prices rising for copper stocks, for gas stocks, for oil stocks, and you talk to the CEOs of these companies, why aren't you drilling more? And they're saying point blank, how about I just let my stock price go up a little bit? I don't get rewarded for adding capacity. I get rewarded for my stock price rising and for my cash flow growing. That's why they're not in a rush to come in and add capacity with all of these constraints we have. And that psychology could persist for a while before they bite the bullet and say, all right, let's add some capacity now. So I think that they're obsessed with their share prices. They should be. This sector, the energy sector, shrunk to less than 2% of the S&P. 35 years ago, it was 20%. So those stocks are going to rise. Supply will be constrained. Nobody is rushing into the rescue. And Max Payne might be a few months from now. Like, we might not even be in it yet. But you have to be able to see through that and to recognize that globally, somebody is going to, it won't be an ESG fund, but somebody's going to come in with the money to add capacity and take advantage of these shortages. You have to be smart enough to know that that's how these things always end. So I would not be loading up a portfolio with catastrophic inflation insurance just yet. Historically, a moderate amount of inflation has been good. Hopefully, that's what we'll eventually get back to. The best inflation hedge in existence are stocks themselves, REITs as well. And if you're really worried about deflation, well, that's what Treasury bonds are for.